All right, good morning or good afternoon, depending on where you are in the world today. Welcome to the webinar. Today, we are talking about distribution and sales channels. We are 18 months into the pandemic, and the hotel sales teams and revenue managers are right now struggling to ride out this very uneven recovery. It appears uneven in terms of geography, pace, booking window, segment. Some countries rather are totally opening up and some are totally closing down. Before the pandemic, revenue managers track things like new airline routes and demand generators like college sports and football games. Now we also have to track things like CDC guidance and travel restrictions. So it's a different world. It's been 20 years since we've seen anything like this. If you recall, after 9/11, travel also took a very big hit. But the hotel distribution world at that time was very different. In my opinion, one of the biggest differences might have been that the hotels and hotel brands were somewhat naive when it came to online booking. In fact, if you want to be entertained, go to archive.org, which is called the Wayback Machine, and take a look at the websites of some of your favorite hotels and brands, and you might have a good laugh. It was, hotel websites they were just kind of getting the hang of things back then. With travel and bookings taking a big hit after 9/11, the hotels kind of flocked towards these OTAs, these online travel agents, the Expedias of the world. The OTAs, to be fair, knew what they were doing in terms of getting in front of travelers. They spent massive amounts of money on the advertising budgets. They were also very good at taking advantage, quite frankly, of the moment and establishing very advantageous terms with hotels. Before long, hotels were bemoaning the high cost of the OTA channels and, quite frankly, spent the next 10 years trying to figure out how to drive customers back to direct low-cost bookings. Flash forward to today, and the world is very different. First of all, revenue managers now have a wide array of tools that are much more sophisticated and much more granular. Hotels seem to have become more scientific in terms of their own marketing and loyalty programs and booking mechanisms. And most importantly, there are a lot of distribution options. For example, in preparation for the webinar, I was looking at our Panelists websites, and on SiteMinder, it says that they connect to over 450 distribution channels. I can't help but think that that's a little bit of a different array of options than we had 20 years ago. So the real question is, how are we responding to the market stress this time around? Are we doing anything right now that we may later regret? What might we be doing differently to thrive in this volatile recovery? So along with our gracious host ROOMDEX, we have 3 companies that both track and analyze channel data and may be able to provide to the audience with some strategy and tactics for moving forward. First though, I want to go around the table, and I'd like all of our panelists to introduce themselves, and then we'll get into it. So Cindy, I'm going to go ahead and start with you. And don't forget your mute.
There we go. Thanks. Cindy Estis Green, CEO and co-founder of Kalibri Labs. We have technology and data to help hoteliers evaluate and predict revenue performance. So we support owners, operators, as well as real estate developers, and we have the most robust database in the industry. We routinely gather data daily or weekly from over 35,000 hotels. We gather transaction data, details of bookings, as well as cost of acquisition from each of these hotels, and then run various algorithms to help hotels generate optimal business mix and to do predictive modeling for forecasting at a rate category and day level. So it's a pretty detailed tool to both help real estate developers figure out if they want to, in their underwriting efforts for buying and selling hotels, and for owners and operators to make better judgments and be better informed about what's available in their market.
Excellent. Fabian, Prinz, can you give us, from OTA Insight, can you give us a little intro?
Yes, thank you very much, Paul. My name is Fabian Prinz. I'm Global Commercial Manager for Market Insight here at OTA Insight. I'm calling you from a relatively rainy afternoon in London, even though I'm German originally. And to give a quick overview of what we do at OTA Insight, we are a provider of rate shopping, business intelligence, and market intelligence solutions for the hospitality industry. By now, we work with over 55,000 hotels worldwide, analyze billions of data points every day related to distribution, to rates, and to so-called new pre-booking data, with the overall goal to really provide hoteliers and revenue managers with the best data available to not just position themselves correctly, but also sell the right room to the right customer at the right time.
Excellent. Thank you, Fabian. Next, we have James Bishop from SiteMinder.
Yes, thanks, Paul. So really happy to be here. Thanks, obviously, for inviting me along on behalf of SiteMinder. I'm the Senior Director of Global Ecosystem for SiteMinder. We're a global hotel commerce platform. We work with about 35,000 hotels worldwide, helping them to streamline their distribution, enabling more distribution channels. As you mentioned earlier, we're connected to about 450 different channels. I think ultimately, the basis of that is through connectivity. We integrate with about 350 different PMSs on top of that. If you talk about how the world has changed in 20 years, I don't think we could have listed 350 different PMS systems back then. But on top of that, we're distributing data. We're moving hotels' data between their PMS and to third-party applications that consume that data to give hotels a better service and better insights on their guests and data.
Excellent. Thanks, James. And then finally, our host, Jas from ROOMDEX.
Thanks, Paul. My name is Jos Schaap. I'm the CEO and co-founder of ROOMDEX. ROOMDEX is focused very much on the automation of room upsell, so not on the booking, but really how much more revenue and how much more services can we provide for guests between booking and arrival, as well as during stay, in order to increase the wallet share that you can obtain from your guests. Thanks.
Excellent, thank you. So just as a reminder to our audience that we really encourage questions from the audience for our panelists. There is both a chat and a Q&A function in Zoom. I think if you can use either, I think Q&A is really what it's made for. But please go ahead and put your questions in there, and we will try to get to them as best we can. So first, to start this off, I'd like to start with Cindy. I really want to kind of set the stage for the current market conditions by talking about, kind of expanding on what I sort of started with, taking a look at the last 20 years and how the distribution world has changed, because I think that what we want to understand is, when we look at different distribution channel options out there, has the revenue manager's role changed, and how does that prepare them to deal with stressful situations? So I'll turn it over to Cindy.
Sure. Revenue managers always deal with stressful situations. They did 20 years ago, and they do today. But I think the pressure on the system now, especially during a COVID recovery period, is really redefining their role. We've had the last 10 years of a very strong, frothy sort of economy, and the hotels were doing extremely well. And it was a job of, all the fish that are jumping in the back of the boat, just sorting out and deciding which ones they wanted to take, because the waves kept coming. The world changed with COVID, and those waves aren't coming the same way. And I think the revenue role is evolving to be more of a member of a commercial strategy team, where they're not, where they have to make the waves. They can't just wait for the waves to come and catch the fish they want to catch. They actually have to make those waves and stimulate the business and create the demand. So there may be less demand in a lot of markets, which forces the teams to be not less selective. In the old days, and I remember this well, when the OTAs started coming in the market, everybody said, you've got to be on every shelf. You want to make sure you're available everywhere. that is now suicidal to be on every shelf. You can't just passively sit there and hope that the breadcrumbs will drop your way. You have to be proactive about it, and you have to intentionally go after a mix of business that is optimal for you, depending on your situation, your market, your hotel. So the not just the revenue manager, the commercial team, and I would say revenue manager, sales director, e-commerce, as a commercial strategy team, have to be extremely well informed about the range of demand available in their market. They have to make judgments about what is optimal. And by optimal, we're always very conscious of representing the owner's needs, who are ultimately the ones who sign all the checks in the hotel, which is highest level of profit contribution. So what is the mix of business that is optimal for any given hotel at any given time? And pursue that with very intentional, proactive tactics and decisions, whether they're direct sales related or e-commerce related, whether they're pricing related or not. The commercial team has to intentionally and proactively pursue the best mix of business that will deliver the highest profit contribution. And that's a really different approach than what revenue managers did when those waves were washing over the back of the boat and the fish were just jumping out and they just had to grab the right fish. So it's really a different world now.
Do you think that there is any danger right now of making mistakes based on stress? For example, yes, that the distribution world is more complicated and more sophisticated, and you have to be much more granular and specific. Do you think that I guess what I want to find out is there the risk of doing something in terms of distribution based on the stress that they wouldn't otherwise do? Or are you saying basically it's maybe before that you could get away with not being granular, but now you can't?
Well, if you're going to make the best informed decisions, you have to understand at a very granular level what is available to you and make trade-off decisions. So right now, a lot of people may think, I'm not making any trade-off decisions. I'm taking anything that comes my way. I'm not going to be selective. That could be a mistake if you are not thoughtful about what you take, because there are channels that require more effort to tap than others. And it may be worth the effort to tap those other channels. For example, those that bring direct or higher profit margin business may take more effort or more skill, but it's well worth it because of the level of control you may have over that base of customers that you bring in. So in spite of the fact that the demand levels may be lower, it doesn't change the need to be selective about what you pursue. And it doesn't change the need for the hotel to actively pursue specific business instead of passively sit back and just hope that enough comes in that they can fill the hotel.
Excellent. Yeah, it's a great point. James, SiteMinder has this tool called the World Hotel Index. And with that, you can kind of keep up to date with booking trends and so forth. What is the index revealed over the last 18 months? What's been happening according to that tool from your perspective?
Yeah, I'll go into that. First of all, I think it's probably worth for anybody who hasn't seen the World Hotel Index just to give a quick overview of the kind of data that it shows. But the World Hotel Index is showing reservation volumes per day as a percentage against previous years into destinations where we, as in SiteMinder, feel we've got enough data to give real insights into what's happening within the market. So we're tracking a couple of things. We're tracking booking momentum, which is the basically the number of reservations going into a market in a day compared to the same date in previous years, and also guest horizon. So then that same reservation data, but looking at the arrival dates. So we're kind of seeing the changes in booking windows and also the domestic and international split. So it's a tool we actually threw together very quickly after sort of COVID hit in March, April last year. And it's kind of been our go-to. But I mean, what we've been seeing is each market going through different phases. And when we kind of studied it, you could kind of clearly, when you spend as much time looking at it as some of us do, you could very clearly see that there is different phases in different markets at different times. So we kind of classified them to make them slightly easier to identify, and we kind of coined them as the 5 stages of the booking reset. So those 5 stages, they're starting from the worst case to the best case, where everyone wants to get back to, is domestic acceleration to plateauing, and then flux, and then embracing, and finally international acceleration. So if you look at markets that we're all quite familiar with in Europe, for example, and so much in the US, we've seen certainly for the last 4 or 5 months, we've seen a more stable and steady increase in booking momentum, suggesting that these markets have actually gone through that period of flux, which happens after the initial, oh my God, we can travel again. And you get that domestic rush and acceleration. And then you go through a period of, to be honest, I don't know which way it's going to go. And then we're into that kind of embracing period where there's a level of settlement, but we're not going to get back to the same level of occupancy or demand that we can expect across a whole market until that international piece really turns on. So if you looked at Asia, for example, where in some regions vaccination levels are lower, or there's a higher dependency on international travel, I would say many of those regions are still in flux, as in could go either way, or maybe even haven't just plateaued on the domestic acceleration, or could be dropping back. I mean, markets can go backwards as well. So if you have a look at what we're seeing in, say, Australia and New Zealand, where they've taken a more recent firm approach with new lockdowns, whilst their vaccination programs are starting to catch up, and they were miles ahead, past, they were up at sort of 80% of where they had been in 2019. But you can see, obviously, as regions are locked down and hotels are forced to shut, that they go back again. So it's quite easy to see those different stages for each market. And I would encourage anyone to go and have a look at that and hopefully get some intelligence on their market and use it, of course, with everything else that they are using today to understand the demand in any market.
So I'm kind of curious, and maybe you don't have this level of detail, but are you able to see a difference in the segment type? Because as an example, I do feel like, at least in the US market, working with Yas and ROOMDEX, we saw, certainly occupancy going up through July, and then it kind of went down in August. In the news, of course, coincidentally, we had sort of a surge of Delta at the same time. So there was kind of like this, like, okay, we can travel again, kind of like what you were saying. And then sort of like either it was a seasonality wall that they ran into, and please, anybody else who has some opinions about this, let me know. The seasonality wall it was run into, or it was sort of the Delta thing. The question, it seems like that was all impacting leisure transient, and then business is potentially on a completely different. It's almost like the business travel is on a different path altogether than that line. Do you have any insights or thoughts on that?
No insights, plenty of thoughts. I mean, we don't share and track the different segments through that World Hotel Index tool, but certainly business travel is in a different position, which, when we look at those, it's more, there's more restrictions. And as we know, we haven't seen each other at events for 18 months. And, if there isn't a reason to travel, then obviously business travel isn't coming back. There's more restrictions from governments in terms of international travel, which obviously dulls that business travel, and even from corporations who have their employees' well-being at heart, where they're actually reducing the amount of international travel that employees are doing.
So we actually track in great detail by segment and rate category by day all of the business in the US market. we broke up the US into 334 markets and 975 submarkets. So we've been tracking it, and we actually are working with the American Hotel and Lodging Association for some of their advocacy work to try to demonstrate how, it looks like the hotel industry is coming back because leisure is strong, but the commercial side of the business is not strong and hasn't come back. So just to give some statistics, 53% of the US revenue in 2019 was commercially driven, 47% was leisure. The leisure business has pretty much come back close, as of the summer, was pretty close to 2019 levels. That will drop off again. We won't have the kind of bump we had last year in Q4 from leisure because the kids are back in school. But the commercial side of the business is still less than half of what it was. So, in this year, we're expected to lose something like $59 billion in commercial business compared to what we had in 2019, which is a massive drop. So the difference between the commercial and the leisure is huge. And the leisure business was, saving a lot of hotels. And for those markets that had a big attraction for leisure business, some of them are doing better than they did in 2019. But those that were more highly dependent on commercial, such as, let's say, Washington, D.C., which, if the national average in the U.S. is 53% commercial, Washington, D.C. was about 63% commercial. And one of the worst markets in terms of return to previous levels, and will probably take, 3 more years at a minimum to regain their footing. So the types of business really matter. And that's what I meant when I was saying, you have to be well informed about what's available, because we used to go after business transient as a routine part of the business. Some of those salespeople now have to learn how to go after leisure transient, different.
Right. Kind of what you were saying before, it's like sometimes you have to lean into some of the more difficult business to chase because the other business just simply isn't going to be there for you.
Exactly.
Fabian, OTA Insights has a insight and forecasting tool. So speaking of forecasting, how are things looking as we move forward the next months and perhaps even years, if you can look at that far out?
Yeah, no, that's a very good point. And I think like a lot of the aspects that James and Cindy have already been mentioning is also something that we see back in our data. I think like what the last year and the recent months have really shown us that these demand patterns that we're all talking about continue to be very, very dynamic. Search demand trends, which is, for example, something that we are tracking for forecasting purposes. For example, in our global market insight dashboard, which for the people who don't know it is relatively similar to what James is doing with SiteMinder, where they track bookings, where we actually tracking the search levels and this what we call pre-booking data. And these trends that we are seeing they're actually very much depending on travel restrictions and reopening scenarios at the moment still, that we're seeing all across the world. Like once markets announce opening or closing measures, we immediately see strong correlations in the search trends for flight, meta search, OTA, as well as GDS channels. And what we see based on this is that overall, similar like how Cindy was saying that commercial teams need to strategize much better. More and more hotels, independent, like everything from the independent property to the global chain, are on the lookout for more data sources to help them rely less on the reach that OTAs are often generating for individual properties. And until now, the OTAs were kind of next to the global chains, the only ones who had maybe insights into these search demand trends at all. And they made really good use of this data to become the global players that they are now. But as more and more of these hotels are focusing on generating more of their bookings via their own more affordable channels, like Cindy was mentioning as well, many are also on the lookout for new data sources that help them position their own products and also to streamline these direct strategies, just like the OTAs used to do it for them in the past. With the difference, of course, that exposure does not need to be shared with potential competitors on your direct channels, like it would be on the OTAs. Like now looking further, like maybe into the next month, because it still remains like relatively unclear what is actually going to happen throughout the autumn and the winter period, is that while we of course hope that we don't encounter market closures like we've seen in the past, particularly in Europe and Asia, changing international regulations will still be defining demand patterns for the next few months that we see. And as we really emerge from this summer break, it will also be really interesting to see if and how this international business travel will be bouncing back. Will there be events that will be driving this travel, and how properties will try to capitalize on this? Because, for example, I looked into the data a little bit earlier today. For London, we've seen GDS search volumes. It's not guaranteed that GDS is fully business, but it's definitely business heavy, increased 13-fold since the beginning of the year. Like, they're at this highest point that we've seen them at all since the beginning of the year, while New York and Los Angeles, in comparison, saw the highest volumes. There was a 10 and a 12-fold increase throughout July, before then decreasing slightly again to like a level of 8-9-fold increase since the beginning of the year. So we always index it, so we have like a nice comparison to go with. So yeah, like, I think everything remains really, really dynamic. We really need to keep looking what the restrictions are, but then also what the data shows us depending on these restrictions. Like, what are the trends that we actually start seeing before the first booking hits our property.
Do you, and again, I'm not a revenue manager, but I'm kind of curious. So would you say that the lack of business travel has basically pushed, has the mix of business become more expensive because business travel itself is lower? So therefore, that, you know, because you have a hole in your spectrum of options, are you now getting pushed into OTAs, which is a higher cost, or even more so, are the OTAs somehow able to increase fees based on the fact that they are very heavily leisure transient focused? And this is an open question to anybody.
Yeah, I think Cindy probably has some great insights into the actual data, probably based on, like, I see you smiling there already. So you probably have a little bit more access to the data that we have when it comes to really what is being booked. But I do think the OTAs became, of course, quite powerful with regards to this. Like, we've seen some kind of a general move also around restricting flexibility policies, which hotels are kind of more like that they need to work with maybe more than if they would have larger business volumes that they could still rely on to fill properties, particularly in destinations. Like, if I think, for example, of a mayor of a destination like Zurich, you know, that is so business heavy that just needs this this kind of level. Otherwise, we really need to work very closely with the OTAs to, in a way, get the exposure we can get.
Yeah, so from you know, what the actual data was showing, in 2020, there was almost a 15% increase across the US in direct bookings. So the shift from indirect to direct, so the OTAs definitely had a rough year.
How do you account for that?
Well, a lot of people, when they were traveling, they weren't sure if they would have to cancel, so they didn't want any ambiguity, like, would it be harder to rebook? Would I lose my money? Can I double check that what the safety and sanitation, cleanliness, you know, issues were? How can I be sure I get to my room if I need connecting rooms? Like, just a lot of questions that were not easily answered on a website, and therefore there was this shift to booking direct, which was very strong shift. We've never seen anything like that at all. But the US market and the European and Asian market are very different. So before COVID, the OTAs were about 16%, I think in 2019, 16.2% or something of the total room night demand. And the brand.com was more like 24 to 25%, so about 50% stronger. In Europe, OTAs are closer to 30%, so almost double. And there's just much more of a contest between the OTAs and the brand.com. But with this shift toward direct, the other thing that happened was a lot of it, because the US is much more brand dominant, the loyalty programs, which I wasn't sure how they would play out during COVID, but they ended up playing an important role, because all of the apps that allow you to have contactless, you know, you do mobile check-in,
Right,
and digital key, you don't have to go by the front desk. All of that was through the app. So if I'm booking a Marriott or I'm booking a Hilton or IHG, I can just walk in and take care of everything through the app. So the uptick in loyalty bookings was notable. So what we saw was a head-to-head contest between the OTAs and the loyalty member rate business, which I didn't know how it would play out, but it actually worked out favorably for the hotels in terms of more profitable business because more of it was coming direct. So that shift, was sort of unpredicted, and we'll see if it'll be sustained. But I think as the brands are constantly enhancing their apps, they're creating this bias for booking and interacting with the brand through their app, which is really a big push for the loyalty programs, and therefore direct business, and therefore more profitable business. But the profile in Europe and Asia is different, and the mix of brand versus independent is very different. And therefore, there's less of that kind of activity, and the OTAs always had a much stronger position. So I'm not sure how that played out, and we don't track data in Europe yet. We are beginning to gather that data, and we'll be able to provide that kind of profile. But the behavior is very similar from what I've learned from the companies we are working with in Europe, where the commercial business has dropped off. I mean, that's the same. The group business, the business transient business is just not starting up again yet. We don't know the nature of it when it starts up. But there's also some silver linings, like there's some good things that have happened because people are working remotely. We're having that blend between the business trip where somebody might be able to work Friday and Monday remotely. So they'll take a long weekend and they'll take the Friday and Monday as sort of business days, but they're actually extending their length of stay. So, or people may take a business trip and stay longer somewhere and extend and take a few extra days that would be leisure focused. So we're seeing a longer length of stay, and we're seeing a really unprecedented uptick in Thursday and Sunday night, which normally are the shoulder nights, and always for 30 years that I've been around in hotels, the worst nights in terms of occupancy have suddenly become pretty good nights.
It's really interesting. James, do you have any observations or thoughts on what you said there? Particularly about just this concept of and I'm not sure like if the focus of your insights, I believe, are also North America and Europe, but like this whole concept of brand.com versus OTAs and any observations there?
Yeah, absolutely. And look, I think Cindy, you're absolutely right to call out the difference in Europe versus the US. And it's interesting to kind of hear that point of view from that side of the pond, as it were. In Europe, it is a lot more fragmented, and yes, we don't have the vast number of brand rooms that we do versus independence is a lot higher. And they don't have the same brand power. So there is, I think, a lot more reliance on the OTAs driving and other third-party types driving transactions for hotels historically. We have seen, similarly to the US, that shift in the share of transactions on direct being increasing across Europe. In fact, across pretty much every market that we've looked at in any sort of detail. The share of direct.
Do we think that that's because maybe there's a less of now price is not the most important thing? One, rates are down.
I think a lot of it's to do with, as Cindy pointed out, is that guests are looking for further clarification on their stay and understanding where they're going. But I think it's impacted quite hard by the type of traveler that's looking to book as well. If it's domestic leisure business, there is a tendency for those, they're more likely to be booking direct than any other traveler. And especially here in Europe, where we have a myriad of languages, we don't have to go far to be in French speaking or Dutch or German, or, if you're restricted to traveling if I'm traveling into one of those countries, to be honest, booking through a third party, I can see that's easier because it's all done in your language. You've got somewhere to go. If you think you've got a problem with your reservation or you need to cancel it, you're not risking, okay, I'll just book on this 15-bedroom hotels website in Italian, I can work through it on Google Translate because it's a pretty bad experience. And then, all of a sudden I have to change that and I have to phone that hotel. I probably think I'm in a lot of trouble there. I'm never gonna be able to sort that out, which is why there's an element of, I guess, comfort in booking through OTAs in international travel, especially in the leisure market. But on domestic, it's very easy to book direct. And I think that's certainly helped to drive up that share. So as we see international travel come back, and especially in the corporate world, like they have to book through certain channels in corporate, but it's either coming through GDS, it's coming through their TMC, it's coming. So, that balance will redress, but I think there's definitely an opportunity in here to educate consumers and educate travelers in booking direct. And if they're having that more of an experience of booking direct and getting a really good experience, then that can only be a good thing for us in the future. But in terms of looking at the balance of between direct and those OTAs, I think initially understanding the types of guests that are currently traveling and who you want to attract. And it goes back to what I think Cindy and Fabian were saying earlier. You really have to understand those segments and who you want to attract to your hotel, because you can't just go and pick them out at the moment. And that's, who's got a propensity to book will help determine your distribution strategy. So as we've all said, we know domestic leisure is a key driver at the moment, but, and typical channels for them being direct, some of the major OTAs, but also through smaller local or niche booking channels, OTAs, and even the DMOs, like the destination marketing organizations. Looking at our own data, we've seen an uplift on those small local OTAs. So I think that's the one thing that a lot of people shouldn't be ignoring during those periods, is actually being able to understand that there is actually more channels that are doing better now than they were pre-COVID, because the type of traveler is changing.
I think the most fascinating thing I heard was that there is, although not direct, there seems to be a line between travel restrictions and booking direct in Europe because of the language thing. I think that's a really interesting insight. Yeah,
look, I mean, that's certainly not data driven, right? Let me give you that. Yeah. But certainly, if we're talking to consumers, and if you look at, if I look at my own booking trends and that of people I've spoken to, yeah, of course, we're much more likely to book direct in your own country rather than elsewhere. But I think it's more important to kind of focus on the consumer, the traveler, and to be present. If you're looking to attract a certain type of booker, you need to be present and have the right story at the right stage of the booking, right, at every booking. And if it's direct you want, you need to invest in that and be present at the start of their booking journey. And that is, through Meta, because it's going to start on Google. Very likely that the majority of those journeys will start on Google. So if you're not already investing in Meta or part of a Meta program, whether you're paying per click or pay on performance, which obviously if you don't have experience is a lot easier, then that's definitely something to look at, to continue to drive that and educate those consumers on that direct booking. But also to consider on search engine marketing as well.
So I want to take a moment to go through a couple of the questions that we've had posted here. One of them was, has brand.com taken share during the pandemic, and how do you predict brands' relationships with OTAs changing in the next 10 years? I think we answered that halfway. Brand.com actually has benefited quite a bit. The question is to the panel, do you think the relationship with the OTAs and the brands change over the next 10 years?
Well, I think the brands, the big brands are becoming distribution platforms. They became asset light for a reason, and
and consolidation itself is reason enough for that too.
Yeah, so I think that the OTAs have much more to worry about with Google and Amazon and Airbnb and others coming into the market. So I think that you can substitute any word you want for OTA. There's going to be large third-party tech companies that are going to enter travel and try to dominate the consumer sales path. And it's, you know, when you're a hotel, you just have to worry about your hotel and making sure that you can get the demand that you need to get that is optimal and delivers the highest profit contribution. So there's going to be a lot of players swirling around and a lot of changes going on in the market over the next 10 years. You just have to keep your head down and understand the demand in your market and understand the best mix of business that you can pursue and intentionally go after it. And we can't be passive, which for many years, it was like you sit back and either the brand delivers it if you're a brand hotel, or the OTAs deliver it, or, you know, there isn't as much activity that needs to be taken. But, you know, to what James said and what Fabian has mentioned, you have to be much more proactive. And I think the role of the revenue manager will change a lot. And I think the idea that you just think about, well, I've got brand.com and I've got the OTA, I think we have to widen the net and we have to start thinking about all of the ways we can get our business and the nature of that business. You know, as we're observing during COVID, you've got these travelers that have changed their behavior, which may be sustained. Like this Thursday, Sunday thing would be great if it's sustained. If we have incremental new business that we can get, it could be kind of a new category of traveler who's kind of part business or can work remotely. So part business, part leisure. That's incremental new business we might not have gotten before. On the other hand, there's business travel that may not happen because a lot of corporations are tightening their belt and saying, do it on Zoom. We don't need to go visit your, you know, your fellow employees in another office. You can just do it via Zoom. So I think that some portion of that business may go away, but I think there's other business that will replace it. I also think there's new kind of group business where if a lot of people are working remotely part of the time, there may be more of an interest in bringing the teams together 2 or 3 times a year and having meetings that might not have happened as much, but maybe the offices are smaller, so they have to go to hotels to have their meetings. So I think we just have to become much more aware of the profile of the demand drivers in our market, and the revenue manager, the director of sales, the e-commerce manager, whatever the roles are, have to come together as a commercial strategy team and really be very knowledgeable about their options, make the trade-off decisions, taking into account what the costs are associated with the business. And it isn't just the cost, it's also control of the customer. If you have third parties that are controlling the customer, they'll go to your hotel today and then they'll cut a better deal with the hotel across the street tomorrow. That's not very helpful. So it matters that you have a relationship with customers, and it matters that you're building those relationships. So the direct business has more benefit than just being more profitable. So I think the revenue managers of tomorrow and the commercial teams of the next 10 years have to become very aware and well-informed of their options and become really good at making those trade-off decisions. Not just, I'll take anything that comes and I'll just make judgments based on who's paying me more money, but I need to decide what I'm best capable of pursuing and how I can attract that business. Do I become really savvy at SEO and digital techniques? Do I become really savvy at going after social group kind of business? I mean, these are things that were always on the fringes before, and I think they have to be more central because we have to get really good at managing the tactics for the kind of business that we have in any given market.
You know, one of the things you said I thought was interesting was, you know, the erosion of the shoulder seasons being a negative thing, and maybe that's because, in my opinion, you know, you don't have to be back in the office. You know, you don't have to be back in the office, and you can get some more. So right now, there's like a lot of hotels that are, you know, promoting and selling day use and you know, workspace, live space, and stuff like that. And the reality is, when you don't have the obligation to be someplace, then that's actually ultimately in the long run might be a positive for the hotel industry. So that then you can actually get some work done at the hotel, and you know, maybe we'll see longer lengths of stay around for a while. So one of the things I want to go back to the questions we had an observation says, I'm glad to hear the direct bookings with leisure hotels is confirmed by the data that you have. My clients in Mexico have experienced this, guests calling the hotel directly to validate safety protocols. Do we think after the recovery, these hotels will continue to benefit from more direct bookings? Again, like one of the things I wonder about is, and Fabian, maybe you can address this. When people traditionally thought of OTAs, they thought, I think initially the theory was I can get the best price. And then the OTAs also provided kind of a search tool, essentially, that was it's like one-stop shopping. Now, granted, that's being eroded by Google and other search companies like that as well. So I guess my question would be, do we feel that we're going to kind of like snap back to the way, are consumers going to snap back to behaving or interacting with OTAs the same way in a year from now? Or do you see sort of these trends, are people looking at and using OTAs a little bit differently, Fabian?
I think, and also going back to the question that we just had here in the Q&A as well, that they said they were calling up the hotel and inquiring about, for example, hygiene measurements and then booking directly. And that's maybe I don't really have the data to fund it, but I still have the feeling that a lot of these searches are initially being made on OTAs. I used the Booking.com algorithm that made Booking.com so successful to figure out what are my top 5 picks, and then I go on that brand.com. And particularly now talking about independent properties as well. I mean, if I'm a Marriott, what I can do on my brand.com is still somewhat limited by Marriott as a distribution platform. But if I'm a very independent hotel, I have absolute complete freedom what I want to do. And I think now there's already these there's already this trend that you maybe check a bit more the actual hotel website to see maybe what hygiene measures that they have in place, what are the check-in procedures that maybe Booking.com doesn't give me the full insight on. And I think hotels have the opportunity to continue this trend. The big importance is that we really need to know what our potential guests are looking for. And that is where, in this situation, hoteliers and revenue managers and commercial teams, and like Cindy said, commercial teams and I think revenue managers are changing very, very much. They're turning much more into a mixture, also the kind of the meeting point between marketing, sales, and e-commerce, maybe becoming even e-commerce managers a lot along the way themselves, that they need to get into a way of not making these decisions on what our customer wants based on what our gut feel is or based on what we have experienced during the last couple of years based on historical data. And I've experienced really several situations in the past where hoteliers that I've spoken to were really, really surprised by geographies that we can see searching for the destinations and the average length of stays that they're searching for. Where we look at this and I say, hey, let's have a look at this data together. Do you know that, for example, I had a case with Vienna where Israel was one of the #1 searching destinations, searching feeder markets, and the hotelier said, I've never had a guest from Israel. How is that possible? And we basically started looking in this together, and if we figure out which guests are wanting to travel into our destination, which of these guests, like Cindy mentions, do I want? Because I can look into my historical data and say, for example, these guests that are searching, what have they historically liked of my property? Which, now very tactical, which room types, for example, do they want? And then I can streamline my brand strategy and my marketing strategy to cater to exactly this traveler. So we can, I think, now is the real opportunity where we have we've flipped the switch in the consumer that they think I can get a lot of really great information there directly. And now we need to make sure that we know who is searching, who wants to come, so we can make sure that we have our complete positioning aligned with what the people want. And I think there's real potential to drive this. Yeah.
Excellent. Thank you, Fabian. Yas, I know you've been trying to avoid questions, but I'm going to throw a question at you. One of the things where certainly your company crosses over is you are observant and are recording booking window times, and I'm kind of interested in seeing what you're seeing from booking window, because we haven't talked a little bit too much about booking window trends and what that means. I know for upselling, The booking window is very important because you have a certain period of time in which you can upsell a customer. So what are your observations based on the data you collect?
I mean, on our side, I think probably everybody else will confirm that too. The booking window has definitely been reduced quite substantially over the last year and a half. It's probably widened slightly a little bit, but most of the conversations we have with our hotels are around a very short booking window. People book probably Monday, Tuesday for a weekend trip, or they book Friday, Saturday for a week trip. So it's very short, which leaves little time to reach out to the guest and build a relation prior to arrival. But there is still enough room, I think, to do such. So there is still a lot of opportunity in which you can interact with the guest prior to arrival and create some more wallet share. And I think to Cindy's earlier point, whereby it's important to create a relation with the guest so you can have him or her come back another time rather than having that third party trying to market the guest to yet another hotel. I think there's a lot of opportunity around building that relation, offering the guests a few additional efforts or a few additional services, maybe a slightly nicer room to get that ADR to go up a little bit more. Even within that shorter booking window of 3 to 4 days, you can still reach out to the guests 1 or 2 days before arrival. So I would say, there's a lot of interesting discussion going on here about the whole booking process. I'm actually very intrigued and listening very deeply to what the three have to say. But I think what I mostly found interesting is what Cindy mentioned is there's a shift. Maybe there's even a business shift that that people no longer necessarily go on a business trip to see customers or something, but they more and more go on a business trip that relates to them going to jobs for a couple of days and then extending that then with some leisure, which again creates another opportunity for upsell or improve wallet share. I'm question to Cindy actually. Did you also see? You mentioned, the business segment is changing. People talk about businesses not coming back or it's not back. Do you actually see hotels proactively changing to offer packages that kind of, would match or would fulfill and help people that have to deal with a hybrid office and go to jobs from time to time, but not all the time? Is that something that you guys already see, or is that more something like taking action rather than just seeing that that's what's happening?
Yeah, no, we've definitely seen our clients putting together packages to build on that, because I mean, who wouldn't want to extend stays by one night, which is what happened during COVID, over one night increase in length of stay. It's worth a lot. And there will be some business that drops off. So anything you can get that's incrementally new is extremely valuable. And anything that has, the good thing that's happened is we, with all of the downturns that we've had over the years, after 9/11 and then the 2008 and 9 recession, immediately everyone dropped rate. Well, that didn't happen this time. The rates have actually gone beyond 2019 levels. They passed that in, I think it was sometime in May that we crossed the line and went beyond across the US. Now, I'm not suggesting that's going to continue, because I think Q4 is going to be not the prettiest picture, because we will have lost a lot of the leisure business and the commercial's not coming back. So, I don't think Q4 is going to be great, and it may bring the averages down, but the rates were remarkably strong, and that was really great. And I think that the leisure travelers were actually less price sensitive. I mean, maybe those that were out traveling, and maybe that'll change. But there was definitely a notable improvement in, of course, also, buoyed by Q3, which was heavy summer. And the rates were really strong in the summer. We had July, the highest rates we've ever seen. I mean, certainly the highest rates we've had in the last few years were the month of July. So I don't know if this will be sustained, but the good news is the whole COVID thing has behaved totally differently from every other downturn, but that's not surprising. It's of a totally different nature. It's not that people don't want to travel or don't have the money to travel. They're just afraid to go out. So I think that we've benefited from rates sort of maintaining. We didn't have the big drop off that we had in other downturns. We have yet to see how the commercial business will come back. The TMCs and the others that are negotiating are pushing hard to try to get lower rates. And it's going to be hard because there's going to be a lot of competition for less of that business. So I don't know if they're going to, it used to be that commercial was always higher and leisure was the price sensitive business. It's been a little bit of a flip on that so far, but I don't know if that's going to continue. But the good news is that across the overall US, the rates have actually matched or exceeded 2019 levels. And that was really encouraging. But again, that Q4 may change a lot of that. We'll see what happens.
Interesting. Well, look, it's we have 3 minutes left to the top of the hour. And what I wanted to do is I just wanted to ask our 3 guest panelists if they can provide just a couple sentences of advice to the hoteliers listening to this about strategies moving forward over the next quarter and over the next year. And James, I'd like to start with you if I could.
Sure, thanks a lot. And I think probably it's been said a few times, but I think it's quite important so over the last hour or so. But when you're looking at, call it a revenue management strategy or your distribution strategy, I think a lot of people look at the end result of that book, like the point of time of a guest booking and where they're booking as to where they should be marketing. I think it's really important to understand for each of the segments or each type of guest that you want to attract or that you feel you can attract at this time, depending on what restrictions you have, that you understand where that guest starts their journey. Are they coming through wholesalers? Like if I want to start attracting travel tour operator business from other markets, if I feel like next year I can start opening up my inventory to international tour operator business, then I've got to make sure that I'm present and speaking to the right wholesalers. Or if I'm still very focused on domestic, then am I going to split that between my OTA or channel bookings versus direct, and look at the strategy on each of those, and not where those bookings are coming from, be it my booking engine or from Expedia, but where are those guests starting their journey and what's it most likely to be, and how can I input my brand in there, whether it's through the channels or my direct strategy. But I think the most important thing is just, if I can finish on a cliche, don't put all your eggs in one basket.
No, that's fair. That's fair. I like that focus on the true market sources. Fabian, how about you? Any last words of advice to our hoteliers?
I think we've kind of like mentioned everything that has been getting really important. Like booking patterns have changed significantly. Forecasting and strategy formulation will really remain challenging also throughout the next month, and we really need to focus on the new data that we can get outside of these historical trends. My recommendation in general is to really focus on this forward-looking data that makes it easier to forecast, and in combination with strategic insights around how our competitors are also positioning themselves, not just with regards to rate, but which strategies are being implemented around things like flexibility, length of stays, certain discounting structures to manage this booking window and their distribution. For example, we can closely track these flexibility policies in the market for, let's say, the next 90 days, where we see our best pickup to understand how the market is reacting to current demand levels and where we would like to position ourselves with the product. Before I finish painting the quick picture, for the US, Seattle currently has the highest number of hotels discounting for length of stay 2, while New York has the highest number of discounts for length of stay 3. 16% of these are even discounting higher than 15%. Dallas has with 70% the highest number of properties offering non-ref and semi-flex rates, closely followed by Boston. We need really all insight into all of this information, because if we are in these markets, then we can see what is the market doing, and then we can find our sweet spot of differentiation. And I think if we find this sweet spot and understand how these shifting demand patterns are impacting the sweet spot, then we can make sure that we position our product best, be it on the OTAs, be it on direct channels, because that will really provide a perfectly tailored product to our potential guests that will then have to help us capture a larger share of in a very competitive market.
Thank you, Fabian. Know thy market, which I think is a great segue to Cindy.
So I would wrap up and say some of the same things I've said throughout. We need to think more in terms of commercial strategy, not be reactive and just take what comes over the transom. We have to proactively and intentionally pursue our optimal business mix. We can't be thinking about sales is going to do their thing and e-commerce does their thing. We need a commercial strategy team that represents pricing and all of the disciplines, sales, BT, group, e-commerce. We need to be as well informed as possible about the profile of demand in the market and intentionally and proactively pursue that optimal business mix. So break down those silos and just determine, start with your end game, which is what am I actually trying to target, which is my highest profit contribution business, and then work backwards with your tactics. Don't just go out in the market trying to get everything, but make a conscious decision to go after a specific business mix with specific plans, whether you need to use the e-commerce levers or the direct sales levers or BT sales levers or pricing levers, or use your brand's promotions, whatever the tools are, those are the tactics, but start with your end game, which is, what is my optimal business mix? What do I want to get from OTAs? What do I want to get from brand.com? What do I want to get from my commercial business? And you have to understand the profile of demand in the market in order to do that. And I really appreciate being part of the program today. And thank you so much for having me.
Well, thank you, Cindy, and thank you, Fabian and James. Yas, I'll let you finish up as the actual host of our meeting.
I mean, I've listened with great interest the whole hour to some great data insights from SiteMinder, Kalibri Labs, and OTA Insights. And I would say to everybody on the phone, and we'll send out the recording to everybody who was not able to join later today. This is a very interesting discussion about what data can reveal and how you can, if you have that data, you can think about new actions and new packages that you can bring to market that may not there today. And if I compare this to what I see on LinkedIn, which is very often about forecast only, I think this is very insightful, and I would strongly encourage that everybody, finds out what more they can learn from data to help grow the business in a very different way, I think, going forward. That's what I would say.
Yeah, I learned a lot during this talk. I want to thank all the panelists. As Yas mentioned, we will be making this recording available. It'll be on the ROOMDEX website. And if you have any further questions that you'd like the panelists to answer, you can reach out to us at info@roomdex.io. Thank you, everybody. Thank you very much for attending today.
Thank you.
Yeah.